The subcommittee will come to order. Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Without objection, members of the full committee not on this subcommittee are authorized to participate in today's hearing. This hearing is entitled, quote, "The Promises and Perils of Central Bank Digital Currencies." And before I recognize myself for an opening statement, I'll just note for the witnesses and anybody watching at home on TV, this is a hybrid hearing, so there are actually people participating that are tuning in virtually. That should be managed. We've done it before. It should be managed well, but there will be moments when questions do come in from people who are participating remotely, just so that the panel is aware of that fact. So with that, I now recognize myself for 4 minutes to give an opening statement and welcome the witnesses to this important hearing. Money and payment systems have been around for thousands of years, but what we think of as money and paying for goods today would have been unimaginable even to our grandparents who carried cash and sometimes wrote checks. Technological innovation in the last 2 decades has transformed money, payment systems, and banking. The rapid growth of crypto assets, digital currencies, and peer-to-peer networks facilitate business transactions and quicker international payments, amongst other things. However, as is true with all innovation, there are potential downsides. Those of us charged with oversight and policymaking must grapple with user anonymity, cybersecurity, investor protection, and market safety, among other challenges posed by this innovation. Today, in very timely fashion, we grapple with the potential benefits and drawbacks of creating government-backed digital currencies. The decisions that emerge in legislation and regulation will significantly shape the world of finance. Some 81 nations, including our own, are now exploring a central bank digital currency. While some countries are moving faster than others, each central bank has its own policy objectives and expectations. The Federal Reserve's forthcoming white paper on digital payment systems will likely provide insight into how the Fed believes the U.S. should approach and monitor these issues in the years ahead. Vice Chairman Perils, in a speech notably entitled "Parachute Pants and Central Bank Money," suggested that all this activity might be a bit of a fad. No single policy change or set of regulations will solve all of the challenges in this arena. The choices we make regarding a central bank digital currency will have both positive aspects and drawbacks. A U.S. central bank digital currency could potentially draw unbanked Americans into a formal and lower-cost banking system. It could provide the Federal Reserve greatly enhanced policy tools, and it could be a prudent response or alternative to the Wild West of privately sponsored cryptocurrencies. However, a central bank digital currency could cause significant disruptions in the existing banking sector, particularly since the Federal Reserve is looking to the Congress for direction and authority. Legislative inaction, which sadly has become something of a default setting in this institution, will be a choice, and not necessarily a good one. Widespread global adoption of other central bank digital currencies, particularly the Chinese digital currency, could erode the highly advantageous role of the dollar internationally. Since World War II, the U.S. dollar has been the primary global reserve currency. The strength and stability of our currency has helped secure our position as the world leader in finance and been a reliable mechanism to facilitate trade and our borrowing needs. The extensive use of the dollar in foreign markets also provides us and U.S. officials with important tools to crack down on criminal groups, monitor illicit activity, and tighten the screws on those who would threaten America or its allies. Much has been said about the Chinese digital yuan and the possibility that the Chinese government will attempt to usurp the dollar as the reserve currency, but we must also be mindful of the actions by our allies. If the U.S. moves too slowly, we risk being overtaken. Today, in my opinion, we are behind. Following the rest of the world in innovation is not a traditional American experience. These are all difficult decisions, and we must approach them with an open mind. We need to work together to foresee the unintended consequences, understand the expected trade-offs, and stay a step ahead of potential challenges. With that, I'd like to again welcome this terrific panel of esteemed witnesses and recognize the ranking member for 4 minutes of opening statement.
Thank you. Thank you, Mr. Chairman, for holding this very important hearing. Thank you to our witnesses for joining us today. I look forward to an engaging discussion. The development of new technologies and changing consumer behavior have resulted in drastic changes to our payments systems. Frictions previously associated with the transfer of funds from person to person or business to business have eased significantly, As the landscape continues to shift, central banks are exploring the digitization of their currencies. There are many potential benefits associated with the development of central bank digital currencies, including easing transactions and reaching previously underserved populations. However, we must also be mindful of the potential negative national security implications, including CBDC's use in financing illicit activities or evading sanctions, and the long-term consequences if we lose our competitive edge to countries like the People's Republic of China. According to recent data published by the Atlantic Council, since 2014, dozens of central banks have begun exploring CBDCs. 32 countries are in the research stage, and 35 have either launched a CBDC, conducted a pilot, or are in development. In the United States, as the chairman noted, the Federal Reserve Chair Powell has indicated that the Fed is closely examining the concept of a digital dollar and plans to release a white paper on the subject in coming months. One area of potential promise of a U.S. digital dollar is expanding financial access and inclusion for unbanked individuals. A recent FDIC survey found that roughly 14 million American adults did not have a bank account. It is possible that lower system costs and digital wallets tied to CBDCs may provide access to underserved populations. Meanwhile, China is pressing ahead in its development of a CBDC and has already launched pilot programs of its digital renminbi with major retailers in select metropolitan areas. In 2016, then People's Bank of China Governor Zhao Xiaoshuan stated that his ambition was to eventually replace cash in China with its digital renminbi. Beneficial to the CCP is the fact that a widespread adoption of a digital currency would allow them to track every purchase, expand domestic surveillance initiatives, and exert greater control over private transactions. The CCP may even use its newfound visibility into transactions as a tool to enforce party discipline. China has made clear their motives to challenge the United States as the preeminent global economic power. The development and implementation of a digital currency is one of several steps in their quest as they seek to usurp the dollar as the world's reserve currency. As policymakers focused on national security implications of financial services, we must closely monitor China's actions and appropriately react to these developments. While it is imperative that the United States not cede its competitive advantage, we must not rush the process for the sake of simply keeping up. With the development of this importance, magnitude, and potential long-term impact, we must realize that getting it right is more important than getting it done fast. In this regard, I agree with Chairman Powell, who last year stated, quote, "It is more important to get it right than to be first, and getting it right means that we not only look at the potential benefits of a CBDC, but also the potential risks. We must also carefully deliberate the appropriate role of the Fed in issuing a CBDC. Should it approach the program alone, going directly to consumers and taking on the roles and responsibilities traditionally held by private institutions, such as customer service, transaction verification, and AML KYC compliance? Or should the Fed approach the issue in coordination and partnership with the private sector? I hope our hearing today will help inform our thinking as we weigh the benefits and potential costs of CBDCs, specifically in the context of U.S. national security and the appropriate role of the Fed. I yield back.
Gentlemen, thanks. The chair thanks the ranking member and now recognizes the chairwoman of the full committee, the gentlewoman from California, for 1 minute.
Thank you, Chairman Himes, for hosting this hearing, part of a series that this committee has been holding on the policy, law, and regulations surrounding digital assets. The Federal Reserve is at the center of our response whenever the economy enters a recession, and thus it is vital that our central bank has powerful tools to achieve its mandate. A central bank digital currency, or CBDC, is one potential tool. In addition to economic matters, as the Fed considers CBDC adoption, Congress must also be mindful of how proposed models will affect the global influence of the U.S. dollar, advance efforts to fight financial crime, impact communities of color, enhance financial inclusion, and balance privacy with the transparency needed to defend the financial system from abuse. So I look forward to the witnesses' comments and yield back the remainder of my time.
The chair thanks the chairwoman of the full committee and now recognizes the ranking member of the full committee, the gentleman from North Carolina, for 1 minute.
Well, I thank the chair for holding this great hearing today. This is a subject that Congress must wrestle with. As Fed Chair Powell says it's better for the U.S. to get a central bank digital currency right than to be first. We're certainly not going to be first, but we have to wrestle with privacy rights and civil liberties, something that the Chinese don't care a whit about. And I agree with my colleagues that a digital yuan has national security implications for the United States. However, a central bank digital currency is not the only tool to compete with China. We should be looking at how we are better than China. How do we improve ourselves? How we ensure private sector innovation continues? How we see competition and competition bringing the best products to market and letting that competition encourage the use of the U.S. dollar and making cross-border payments faster and cheaper. There's a lot of work to be done, but I'm glad we're jumping into the fray. Congress must wrestle with this, and it is on us to legislate this into existence if that is the right thing to do. And with that, thank you, Mr. Chair.
Gentleman yields back. Today, we welcome the testimony of our distinguished witnesses. First, we have Ms. Julia Friedlander, the C. Boyden Gray Senior Fellow and Deputy Director of the Atlantic Council. Next, we have Mr. Yaya Fanusie, an Adjunct Senior Fellow for Energy with the Economics and Security Program at the Center for a New American Security. Next, we have Dr. Andrew Levin, a Professor of Economics at Dartmouth College, followed by Dr. Julia Coronado, the President and Founder of MacroPolicy Perspectives. Finally, we have Mr. Robert M. Baldwin, the Head of Policy at the Association for Digital Asset Markets. Witnesses are reminded that their oral testimony will be limited to 5 minutes. You should be able to see a timer on the desk in front of you that will indicate how much time you have left. When you have 1 minute remaining, a yellow light will appear. I would ask that you be mindful of the timer, and when the red light appears, to quickly wrap up your testimony so that we can be respectful both of the other witnesses and the committee members' time. Without objection, your written statement will be made part of the record. Ms. Friedlander, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Good morning, and thank you, Chairman Hyams, Ranking Member Barr, and esteemed members of the subcommittee for the opportunity to speak to you today about central bank digital currencies and their role in global finance. My name is Julia Friedlander. I'm the C. Boyden Gray Senior Fellow and Deputy Director of the Geoeconomic Center at the Atlantic Council. I lead our work on economic statecraft. That's the use of financial, economic, and regulatory tools in foreign policy. I have served as an economist at the CIA, as Senior Advisor at the Treasury Department's Office of Terrorism and Financial Intelligence, and 3 years on the National Security Council staff. This decade of federal service gave me an acute sense of how financial regulation intersects with national security and the role of the United States in global standard setting based on entrepreneurialism, rule of law, and respect for the rights of the individual. Last week, the Geoeconomic Center launched the newest version of its CBDC tracker, which follows the progress of research, design, development, and piloting around the world. You can explore it at Atlantic Council.org. The database features 81 countries, more than double the number we identified 1 year ago. 5 countries have fully launched a digital currency, while 14 others are in pilot stage, like South Korea and Sweden. However, of the 4 most influential central banks in the world, the Fed, the ECB, the Bank of Japan, and the Bank of England, the United States is furthest behind. Countries are pursuing CBDCs for a variety of reasons. COVID-19 obviously played an outsized role. The need to deliver unprecedented fiscal and monetary stimulus called for innovation in payment systems. Another is the rise of cryptocurrencies and stablecoins. Some central bankers fear losing control of monetary sovereignty, while others see stablecoins as a potent complement to the existing financial system. And of course, there's Beijing. As of June 2021, the People's Republic of China announced corporate and personal wallets valued at over 5 billion, and has begun groundwork for cross-border transactions with Thailand, the United Arab Emirates, and Hong Kong. These tests are limited to bank-to-bank transactions, not retail. I'd like to emphasize, however, that this is not only a story about how we manage China. Around the world, central bankers recognize they cannot ignore the advent of new forms of digital money. I'll touch on 3 national security considerations from our research. First, countries researching or testing CBDCs use Know Your Customer procedures similar to the traditional banking sector, but are developing different thresholds to balance KYC with financial inclusion and lowering barriers to instant payments. This could lead to a patchwork quilt of regulations and operating platforms, making KYC ineffective. Second, what one country calls due diligence may be a data privacy violation and illegal state-led surveillance in another, complicating cross-border transactions or risking personal safety and industrial espionage. Nation states and hackers linked to organized crime could target CBDCs to attain sensitive data and funds, or destabilize the global financial system. Third, the role of the US dollar. The dollar continues to dominate international commerce, reflecting the attractiveness of the US economy as a safe haven for investment. We see no immediate threat to its role in financial settlements and debt markets or in global reserves. Most CBDC programs are focused on domestic use cases, not international transactions. Compatibility and widespread standardization are a prerequisite for a CBDC to challenge the financial system as it currently is. However, in the medium to long term, if CBDCs demonstrate superior effectiveness in the speed and cost of transaction, they could begin to undermine the dollar's status. If countries are able to build wholesale, cross-border CBDC mechanisms at scale, these payment systems could begin to replace SWIFT and other messaging systems. This could, over time, reduce the share of international trade and capital flows denominated in dollars. How might this happen? Over time, countries may develop cross-border interoperability that settle transactions instantaneously. The dollar would become a technological laggard. In the private sessions we convene at the Atlantic Council, we have heard from other nations that are eager to hear from the US and without our guidance may look to China on how to build a CBDC. Chair Powell has emphasized that as the issue of the world's reserve currency, it is more important to be right than to be first. This is prudent, but the Fed risks allowing a fractured digital currency ecosystem to evolve in a way that does not protect privacy and security. The US must innovate from a position of strength. This does not necessarily mean issuing a digital dollar. Instead, the US can galvanize international coordination and ensure countries create digital currencies that are both safe from attack and safeguard citizens' data. Currently, there is a patchwork of regulatory bodies that claim some jurisdiction over development, but the US has been able to bring solutions to the table. Powell has been clear that he does not believe the current language in the Federal Reserve Act allow him to create a digital dollar. If Congress believes in the digital dollar, it should consider authoring a private pilot program, ensuring role for Treasury and varying bodies in the oversight and coordination process, or amend the Federal Reserve Act. In countries with a pilot program, other than in China, the legislature has been a key player in the process. US legislation would have a positive ripple effect around the world. It would show that we are at the forefront of innovation and compel other countries to coordinate with us. Countries exploring cross-border testing with China might worry that partnership with the digital yuan would preclude a partnership with the digital dollar. The US need not roll out a large-scale CBDC, but we need to start a new serious conversation. For the world's largest economy, the global financial leader, and the creator of the Bretton Woods system, the risk would be to do nothing. In finance, the first mover has an advantage in setting the international operating environment, and the US is a force multiplier. We can and should lead the world in the development of a safe and secure CBDC. Thank you for the opportunity to appear before this committee, and thank you for focusing on this very important issue.
Thank you, Ms. Friedlander. Mr. Fanusie, you are now recognized for 5 minutes for an oral presentation of your testimony.
Thank you. Chairman Himes, Ranking Member Barr, the distinguished members of the subcommittee, and my fellow panelists, it's an honor to participate in today's hearing. CBDCs inevitably, I believe, will become some part of our global economic landscape. In my testimony, I'll offer framing to understand the rise of CBDCs, outline some of the geopolitical positioning currently underway around the technology, and explain the policy posture needed to navigate the opportunities and threats that a CBDC environment may bring to US national security. First, it's best to frame CBDCs not just as a monetary development, but as a data development. For example, China's motivation for its digital fiat currency is rooted in the Chinese Communist Party's push for national fintech technology development, which is focused on building a data-driven digital economy. Online retail bank accounts, mobile payments, distributed ledger technology, and smart contract programmability are part of a range of software innovations that currently are unlinked to central bank money. CBDCs are an attempt to integrate the world of central bank money directly with both conventional and emerging data technology. Whether or not CBDCs hold either more promise or more peril for US national security will depend on how well the United States crafts policy to partake in and influence the march of fintech innovation emerging globally. Here are some important strategic points or considerations that I think policymakers must address for a sound, national security-informed approach to the rise of CBDCs. One, correspondent banking. So the high chance that correspondent banking will be disintermediated on some level when CBDCs proliferate. Now, private banks will not become obsolete, but banks will need to augment their services to maintain relevance in a world where users digitally possess direct liabilities with their central bank and can transact more seamlessly with foreign counterparties online. So private banks will need to find revenue models revolving around data and software-related services to remain profitable in a CBDC world. They'll have to be informed by data for their manual due diligence commitments. Also, whoever governs or influences the international CBDC to CBDC architecture is likely to gain considerable geopolitical power. Earlier this year, China's central bank proposed rules for CBDC interoperability across jurisdictions at a Bank for International Settlements seminar. The BIS also could become an environment where CBDC software is recommended or authorized for all central banks. China currently has the most progress for CBDC piloting amongst advanced or major economies. The US will need to increase its CBDC expertise and assert greater influence in the BIS and other international fora that guide CBDC development. Also, CBDCs could be weaponized in some way to retaliate against the United States. Depending on how a global CBDC system is governed, it could be possible for a bloc of countries to restrict the United States from an international CBDC apparatus that operates outside the SWIFT messaging system. Also, if you consider it, a foreign government's control over its CBDC infrastructure may make it easier for that government to block local CBDC accounts or wallets used by US companies operating in that country. Also, US economic policymakers are going to need more collaboration with computer scientists. Economists at the Fed are going to have to wrestle increasingly with complex computer science problems as they assess the possibilities. The Boston Fed's current partnership with MIT is an important step in CBDC research, but given the global pace of CBDC development, multiple Fed branches probably should collaborate with university computer science departments around the country for more extensive research. Also, fine-tuned rules around data privacy will be needed if the US launches a digital dollar. CBDC transactions, even if anonymized, will comprise a new data stream that could help the government and private firms improve financial services. But more specific guidelines on data access must be mapped out. Will law enforcement have real-time access to the raw, anonymized data feed? Policymakers and technologists must create parameters not only around what entities can directly acquire CBDC data, but precisely how much of it and for how long. The growing exploration of CBDCs does not mean that all nations will develop one in the near future. But with all the CBDC research and piloting occurring, it seems highly likely that the world will not return to the status quo of a decade ago, when there was no foreseeable technological shift in central bank money governance. Instead of asking if CBDCs will proliferate, the US inquiry should be on how they will develop and what their governance should be across borders. Despite some of the accompanying risk from CBDCs that I've outlined, the sound policy posture is not to seek to stop the development of this technology. The US position should be to promote, harness, and shape fintech innovation so that it aligns with American interests and values. This may manifest in the US deploying a digital dollar, but either way, the United States must prepare for a world where CBDCs operate in the global economic landscape. Thank you, and I look forward to your questions.
Thank you, Mr. Fanusie. Dr. Levin, you are now recognized for 5 minutes for an oral presentation of your testimony. You'll need to turn your mic on. Yeah, thank you.
Chairman Himes, Ranking Member Barr, and members of the subcommittee, thank you for inviting me to testify at this important hearing. I will highlight how the establishment of a digital dollar provides a crucial opportunity to improve the payment system for small businesses and ordinary families, and I will underscore the urgency of moving forward promptly on this initiative. My written testimony has highlighted the views of small business owners in my region, and actually there's some slides that are a handout for you to look at too. For example, Sean Taylor recently achieved his dream of starting his own barbershop. It's called the People's Barbershop in Hanover, New Hampshire. His business has been thriving, and he's now hired his first apprentice, Charlie Foster. On average, about 3% of the price that Sean receives for every haircut is being transferred to huge multinational payment providers, 3%. I've heard similar concerns from many other small business owners, such as the founders of the Norwich Farm Creamery. Again, you can see their photograph in the slides. And I gained numerous insights from Becky Dayton, who's been running the Vermont bookstore for the past 16 years. Becky says, "I'm working extra hard to keep this little bookstore alive in my community." The same issues are faced by small businesses across the country, including online retailers as well as brick-and-mortar firms. It's not surprising that small businesses are uniformly enthusiastic about the prospect of establishing a digital dollar. It would be secure, convenient, and costless for both the payer and the payee. Cutting payment transaction costs will help foster more business startups, entrepreneurs, and create more jobs. In joint work with my colleague, Michael Bordo, we have concluded that a digital dollar is technologically feasible and eminently practical. And we have formulated the following set of basic design principles. Again, these are listed on your handout. 1, the Federal Reserve will be responsible for managing the centralized ledger. Supervised financial institutions provide digital dollar wallets for their customers. We call this a public-private partnership. It's standard in infrastructure and many other types of public-private operations. This approach will foster competition and protect personal privacy. 2, with a centralized ledger, every payment transaction can be transmitted instantaneously and securely at practically zero cost, and the risk of fraud can be mitigated by standard methods such as two-step verification. 3, the digital dollar should be usable for all public and private payment transactions, legal tender. But consumers should be free to use other forms of payment, including paper cash. And this is, again, a very dramatic difference from the design that the PBOC is developing. Digital dollar accounts should bear essentially the same rate of return as U.S. Treasuries. Now, that might seem like a dramatic development, but in fact, the Federal Reserve has already implemented similar measures, mostly for the benefit of high net worth individuals and institutions. With the establishment of a digital dollar, consumers and small businesses will be able to receive a competitive interest rate on their everyday payment accounts. 5, given that funds held in digital dollar wallets will be fully secure, safeguards will be needed to disincentivize high net worth individuals and institutions from making huge transfers into digital dollars at times when the financial system is under stress. 6, the interest rate on digital dollars should become the Fed's primary monetary policy tool, and that will strengthen the Fed's ability to carry out its dual mandate. Now, I want to just highlight some factors that call for moving ahead promptly in establishing a digital dollar. 1, the dollar is the key pillar of the global economy, as evidenced by trade invoices and debt securities. And it's just critical, I think it's absolutely critical for the Federal Reserve to move quickly in creating a digital dollar. The ECB, the Bank of England, other major central banks are moving forward promptly. The Fed needs to do the same. Secondly, as others have said, the Federal Reserve needs to play a key role in the design of the cross-border currency exchange platform. It's just inexcusable for the Fed to stand back and let other major central banks take that role. Third, Facebook and other big tech firms are moving ahead quickly in launching their own digital currencies called stablecoins. If that happens and those stablecoins dominate the US payment system, the banks will be dramatically affected too. But it'll also be a regulatory nightmare for regulating consumer privacy and equitable treatment of small businesses. So this is, again, it's not just that China is the threat, the whole digital landscape is changing and the Fed needs to catch up. Finally, the Federal Reserve Act does not require Federal Reserve notes to be issued as paper bills. Congressional legislation is not a prerequisite for the establishment of a digital dollar. But the US Congress is the Fed's boss. You're the boss. And hearings like this are crucial for overseeing the Fed's role in ensuring that the payment system works effectively for small businesses and ordinary families across the country. Thank you for your consideration. I'll be glad to answer your questions.
Thank you, Dr. Levin. Dr. Coronado, you are now recognized for 5 minutes for an oral presentation of your testimony.
Thank you very much. Thank you for the opportunity to testify. I also have a set of exhibits at the back of my testimony. My name is Yaya Coronado. I'm the founder of MacroPolicy Perspectives. I've spent my entire adult life in the financial services industry, from being a bank teller to staff economist at the Federal Reserve Board to chief economist at one of the largest global investment banks. I also teach macroeconomics to business school students at UT Austin. I stress to my students that the US dollar did not become the global reserve currency overnight. It's a story of evolution, and the job is never done. Digital currencies present a challenge to the US and other countries, and we must rise to that challenge. If we do it well, we can improve the safety and soundness of our financial system and enhance the equity and efficiency of monetary policy. My remarks will draw on a proposal I put forth with Simon Potter. We propose the creation of a new system of regulated financial institutions called digital payment providers to facilitate fast, inexpensive retail payments for consumers through the use of a digital currency backed by reserves at the Fed. Much like the current banking system, a two-tier system would promote competition and continued innovation, while Fed oversight would promote safety and soundness. Our proposal would limit account size to preserve the role of the fractional reserve commercial banking system. The proposed system would help the Fed ensure that the valuable public good of a stable currency survives the transition to a digital age while using lower costs to reach the underbanked that have not benefited from payment convenience and security offered by the current banking system. Relying on the private sector alone to offer the benefits of new technology, as the US is currently doing, introduces significant and growing sources of systemic risk. The Fed would need to invest in a new infrastructure that establishes and monitors a rigorous standard for cybersecurity, consumer privacy, and system resiliency. The Fed would not have access to individual data, but could establish and monitor standards for consumer privacy. Our current lack of digital infrastructure has left our economy vulnerable to increasing attacks. An important byproduct of a CBDC will be a public-private partnership that confronts the most significant risk to the functioning of our market economy. Some Fed officials have urged the need for caution given the dollar's role as the global reserve currency. I cite that as a need to move forward with urgency. Private cryptocurrencies are proliferating that pose risks to financial stability. Other countries are advancing the ball on CBDCs. The US should not just be engaged, but be playing a leadership role. Digital currencies also present an opportunity to make monetary policy more equitable and efficient. Why does the Fed need a new tool for monetary policy? Interest rates have fallen around the world in recent decades, leaving the Fed and other central banks increasingly reliant on balance sheet policy to achieve their goals. Bond purchases work by lowering long-term rates and boosting asset prices. The Fed has faced the critique that its policies exacerbate inequality, and boosting asset prices does make the rich richer. However, the alternative is to allow unemployment to increase, disproportionately harming lower wage and Black and brown workers. Doing nothing is not an option, but the Fed lacks the tools to boost the economy in a more equitable fashion. Digital accounts can add a more equitable tool. We propose the creation of recession insurance bonds, zero-coupon bonds authorized by Congress, calibrated as a % of GDP sufficient to provide meaningful support in a downturn. The Treasury would hold these securities on behalf of the public, the Fed would purchase them in a downturn, and credit household digital accounts. Cash transfers may sound like the domain of fiscal policy, yet it precisely mirrors the permanent expansion of the money supply Milton Friedman described as helicopter money. The COVID recession confirmed that interest rates and balance sheet policy remain powerful tools, yet we have also seen that providing cash to households in a crisis is more powerful in sustaining demand when the economy is hit with a shock that leads to rising unemployment. Digital payments could also reduce risks to financial stability. The Fed's increasing reliance on bond purchases may be contributing to asset price inflation becoming higher and more cyclical. Lower interest rates and higher asset prices spur business investment and consumer spending, which leads to job creation. Asset prices usually decline in a recession, which can amplify and deepen job losses. Direct payments to consumers can stabilize demand in a recession more effectively, and knowing the Fed possesses such a tool could calm investors and reduce the need for the Fed to engage in medium-term asset purchases. Disruption from technology is an inevitable part of every industry. It also creates opportunity. Develop together a Fed-backed digital dollar, low-cost accounts and payment processing, and a framework for the Fed to make digital deposits to consumers could make U.S. institutions able to meet the challenges of the current global environment. Thank you.
Thank you, Dr. Coronado. Mr. Baldwin, you're now recognized for 5 minutes to give an oral presentation of your testimony.
Chairman Himes, Ranking Member Barr, distinguished members of the subcommittee, thank you for the opportunity to testify today. My name is Robert Baldwin, and I'm the head of policy at the Association for Digital Asset Markets, or ADAM. In this capacity, I oversee the policy and standard-setting process for the self-governing association and work to develop industry best practices that facilitate fair and orderly digital asset markets. Prior to ADAM, I served at the U.S. Department of the Treasury and the Central Intelligence Agency. My testimony today seeks to advance the conversation on the future of U.S. payments. I will focus on the current status of payments in the U.S., goals for an advanced payment system, and discuss two leading solutions, including the development of a central bank digital currency, or CBDC, and the use of a responsibly managed private sector stablecoin. Domestic and international payment settlement mechanisms have not kept up to the recent advances in telecommunication technology. These complex, decades-old networks are costly, slow, and susceptible to cyber attacks. However, the international correspondent banking system has served the United States very well. The U.S.'s economies, deep and liquid capital markets, strong rule of law, and dynamism have enabled the dollar to become the preeminent global reserve and transaction currency, accounting for over 60% of global transactions, despite the U.S. making up about a fifth of global GDP. This has provided the U.S. significant fiscal space, allowed it to maintain a robust sanctions program, and has created many American jobs in financial services. However, the system of payments is facing pressures on two fronts. First, from international competition, such as China, and second, from innovations stemming from the development of blockchain technologies, which allows users to make both large and small payments in a fast, affordable, and secure manner. It is imperative that the U.S. looks to the future at this critical juncture, and that the future is likely related to the use of blockchain technology. When modernizing our payment system, the U.S. should seek to establish a consumer-friendly system that benefits domestic consumers while also making itself attractive for use in international business. Such a system prioritizes low cost and fast payments, individual privacy, transaction transparency and data control, and ultimately ensures that the U.S. dollar maintains its prominence in international markets. One such way to accomplish this is through the establishment of a central bank digital currency. A CBDC system offers the potential for speed and cost benefits and offers promise in areas such as financial inclusion and improved cross-border transactions. However, a well-designed CBDC is a considerable undertaking and will require many intentional design choices. Another option is a regulated private sector-led stablecoin approach endorsed by and coordinated with the federal government. This could answer many of the stated goals and serve in lieu of or in advance of a CBDC. The federal approval process for fully reserved or nearly fully reserved stablecoins would be audited and would be akin to a one-to-one stablecoin. This is similar to how the New York Department of Financial Services provides oversights of its stablecoins. The system would be built on top of current financial infrastructure to provide a faster payment layer and would be purely opt-in for businesses or consumers seeking to leverage the benefits of stablecoin. A stablecoin system would accomplish the core mission of making payments cheaper and faster and could likely be developed and implemented quickly. Some questions on the functioning of this system remain, but ultimately it is a very promising approach. The U.S.'s strength in international payments and financial services space is an American treasure that has tremendously benefited the country. The U.S. must continue to innovate in this space so that it does not fall behind to pressures from international competition and digitization. The payment system is a very, very complex process which must be handled and studied with great care. New developments in this space take time to develop because of the intricacies involved and the necessity that there are no issues. The U.S. must start to operationalize testing and design of various approaches to payment efficiency improvements so that when it is time to act, policymakers have a full suite of options. Thank you for your time. I look forward to answering any questions you may have.
Thank you, Mr. Baldwin. We'll move now to questions from the membership of the subcommittee. Just a reminder, we'll observe the 5-minute rule. I will ask members to wind up their questions within the 5-minute time frame. I will allow witnesses to finish answers to questions within reason beyond the 5 minutes, but any questions that extend past the 5-minute will have to be answered on the record. With that, I recognize myself for 5 minutes. I'd like to spend a couple of minutes talking about the risk of inaction. There's a lot of issues at stake here, including possible threats to the traditional banking system. The word China gets the Congress these days to sit up quickly, but it also strikes me that decisions about which currency one might use have everything to do with baskets of trade and all sorts of other factors that don't relate to the nature of the currency. And of course, the digital yuan is going to raise all sorts of issues around privacy and control by the Chinese regime. So maybe I'll start with you, Ms. Friedlander, and if I have time, I'll move on to other witnesses. What is the time frame, and what are the indicators, the signals that the United States, if it were in fact behind, as it appears to be, in the creation of a central bank digital currency, that we would in fact lose the ability to lead and innovate in this area? Are we talking about 3 months, 3 years, 10 years? What does that look like?
Thank you. I think it would be difficult to put an exact time frame on it because the current landscape is so disaggregated. Different countries, as we note in our tracker, are at different stages of research and development, all of which are primarily based on domestic use cases. So what I would look for as a sign that the US has missed the mark or missed the train leaving the station would be wide-scale adoption of a central bank digital currency and cross-border use. Now, currently there are only 2 pilot cases of this, 2 of which, one is between China, UAE, and I believe one other country in Thailand, excuse me, and another between the UAE and Saudi. Those are really only bank-to-bank transactions. These are not for large-scale wholesale use. So I would look for indications that the model was internationalizing by another country. Right? And so that means that we really haven't, I mean, as we've all noted here, it's time to move, but we certainly haven't missed the ball in any stretch of the imagination. This is the time for yourselves, for the Federal Reserve, in collaboration with BIS, and we argue the G20, to really develop consensus on all of these criteria for adaptation globally that reflect our values based on privacy and industrial espionage and all the things that we have noted elsewhere.
Thank you, thank you. Dr. Levin, your testimony had a whiff of urgency to it. Do you agree with that? Do you think we're at risk of losing out here? And on what time frame?
So you have to imagine here.
You got to turn your mic on.
Just like on Zoom. You have to imagine central banks tend to be conservative.
Can you pull the mic a little closer?
Okay.
Thank you.
Central banks tend to be conservative, and the Association of Central Banks, it's called the BIS, the Bank for International Settlements, is traditionally very conservative. The general manager of the BIS has said that it's a wake-up call for central banks. He has said very clearly that central banks need to introduce their own sovereign digital currencies. The European Central Bank has already indicated that they're going to do it. The Bank of England has come pretty close to saying that now. The problem here with delay is that even if these currencies are initially introduced for domestic purposes, there will be a cross-border platform. That's part of what the BIS is working on now, so that these currencies can be easily interchanged with each other. And if there's no US digital dollar on that platform, then you better believe that all the international trade invoices that have been conducted in US currencies, even by countries that are not directly trading with the US, they're invoiced in US dollars, they'll all migrate to other digital currencies. The same with sovereign bonds. Many countries issue sovereign debts that are denominated in US dollars today. Many corporations in Korea and other countries issue their debts in US dollars. If there's no US digital dollar on the cross-border platform, then all of that will change, and it's probably not 10 years away, probably not even 5 years away. We're probably talking, I would guess, 2 years. But that means that the Federal Reserve has to catch up. I think several of you said this earlier. It's not just that the Fed is kind of right at the cutting edge. The Fed is behind the curve right now, and it needs to catch up urgently, and it doesn't have much time left to do that.
Okay, Dr. Levin. Dr. Coronado, I'm almost out of time, but so quick question, quick answer. Addressing the issue of the possible flight from banking into CBDC in moments of stress, are there other mechanisms to alleviate that other than caps on the amount of accounts?
So there are
potential structures that you can put in place, but the caps on the accounts is the easiest way to achieve that. And just I think it's definitely a solvable problem.
Okay, I am out of time. I apologize for that, but I would like to follow up perhaps for an answer on the record on that issue. With that, I'll recognize the distinguished ranking member of the subcommittee for 5 minutes of questions.
Thank you again, Mr. Chairman, for holding this important hearing. Mr. Baldwin, given that China is years into its pilot program and has expanded its digital currencies availability in more major markets, is there a risk presently that the U.S. Will cede a global economic competitive advantage to China if we do not follow suit and quickly with a digital dollar?
China has many structural issues associated with its central bank digital currency. First of all, being a lack of rule of law, concerns about privacy, as well as capital controls. Those make an unappealing option in the international global sphere if there are no other options. The U.S. needs to catch up to the Chinese development, but when the U.S. presents its own alternative, there is an obvious incentive for the current system to utilize an American-based system.
Okay, given that, let me drill down on a couple of follow-ups. What impact may it, if the United States does not proceed with its own digital dollar, a CBDC, or some kind of private sector-led stablecoin regulated by the government, what impact would that have on the effectiveness of U.S. sanctions should the influence of the dollar wane?
The sanctions authorities and abilities that we are provided are results of the International Correspondent Banking Association systems. So the United States' sanctions abilities would be undermined if alternative systems that do not cross through traditional U.S. correspondent banking systems are undermined.
Yeah, and I think Ms. Friedlander also made that case pretty persuasively. Final question to you. Describe the digital dollar CBDC approach versus the regulated private sector-led stablecoin approach. What are the pros and cons?
Yeah, a CBDC approach could take two forms. It could be in a tokenized form, so essentially a digital dollar that's transferable around from different wallets, or it could take an account-based approach. There are a number of privacy considerations that need to be taken into account for a CBDC approach. A private sector stablecoin approach would build on top of our existing financial infrastructure. So that would enable faster payments on a back-end basis and would be primarily opt-in. So banks that are seeking to have faster payment settlements could implement a stablecoin approach to have faster payment settlement times, and then there could be obvious abilities for the private sector to innovate at a consumer level, so providing options for consumers holding stablecoins.
Well, for any of our witnesses, does anyone have an opinion on, in terms of the competition with China and other international competitors, is there a preferred approach, the authentic CBDC approach or the regulated stablecoin? Dr. Levin?
Yeah, I really appreciate Mr. Baldwin's perspective, but I think that the truth is here that it depends on how the stablecoin is designed. If you have a stablecoin where it's 100% backing by reserves held at the Federal Reserve, which is essentially what Dr. Coronado was describing, and it's essentially what Michael Barr and I have been advocating for quite a few years now. Okay, it's actually a narrow bank, and I know that Chairman Himes is familiar with this issue. Okay, that a narrow bank means that the deposits that a customer makes are held 100% reserves at the Federal Reserve, so it's perfectly safe and secure, and in the kind of payment system we're describing, it can be instantaneously transferred. The point is, if you have a privately issued stablecoin that does not have 100% reserve backing, it's backed by something else, people are going to have questions about it. And this is not the first time in history. There's been other times in the past where there were kind of privately issued currencies, and they had different values, trading, there were exchange rates of the different stable coins. We can't have that kind of thing at the center of our...
Thank you for that
insight. The bottom line here is we've got to move forward with a central bank issued currency.
Thank you for that insight. On monetary policy, Dr. Levin and Dr. Coronado had some views on this. I will have to say Dr. Coronado was a little alarmed about some of the concepts that you're putting out there, and so moving the role of the Fed into a much more powerful role and a more non-conventional role. So with respect to monetary policy, this idea of strengthening the Fed's ability to foster dual mandate of maximum employment and price stability. Is there a risk of giving this kind of power to the Federal Reserve to undermining price stability and contributing to, for example, inflation? Mr. Baldwin, do you have a view on that? Dr. Coronado has a view on that. I've run out of time. Nobody's answered that question, but perhaps you all could answer that question in the next round of questioning. And I am intrigued, Mr. Chairman, by the argument that we need legislation. And I would like to know also from the witnesses in the conversation today what that should look like. With that, I yield back.
Gentleman yields. The gentleman from New Jersey, Mr. Gottheimer, is now recognized for 5 minutes.
Thank you, Chairman Himes and Ranking Member Barr, and thank you to our witnesses for being here today. I'm very concerned about the increasing attractiveness of cryptocurrency and blockchain technologies for illicit actors, such as foreign terrorist organizations, including Hamas, Hezbollah, and ISIS, and others, and those who wish to avoid American sanctions, such as Iran and Venezuela, and domestic white supremacists, including the Proud Boys and other violent extremist groups which were involved in the January 6th attack on the Capitol. Mr. Fanusie, if Russia, China, or Iran creates central bank digital currencies, either individually or in coordination, to operate outside of the dollar and the technology underpinnings international money transfers, how would that, do you believe, impact America's ability to effectively target economic sanctions on those who wish to do us harm?
Thank you. Very good question. It's going to depend on exactly how those digital currencies are governed and what their sort of uptake is. You know, one model is that accounts are going to be held by banks, that banks are going to still have to hold these digital currencies, or these CBDCs. So the question would be, does the U.S. still have leverage to influence those financial institutions which are dispersing, which are interfacing with users? I don't think in the short term, because Russia or any U.S. adversary creates a CBDC, that means that then those institutions within the country, even if it's China, it doesn't mean that that country is not going to still need access to the U.S. dollar, to the global financial system. This is not something that just a technological deployment is going to is going to give them that much leverage. So I think you have to look at it as a short-term issue versus a long-term issue. I think the long-term risk is not in, are these CBDCs proliferating, but the question is, what does the international CBDC exchange system look like? How many other parties are actually invested in it, and does that system rival the conventional systems that we have?
Thank you for that. And are there structural aspects to CBDCs that may be of benefit to America's sanctions program and our fight against illicit actors in the financial system?
Well, I mean, I think if that's why the idea of promise or peril is really good, right? Because on one side, yes, there is this issue of lack of, long-term lack of sanctions, pressure or vulnerability on these actors. But if you also think about a bigger ecosystem where there may be some pluses. So for example, if, because of the technology, if we have a system where, whether it's, let's say, US CBDC, where now it's easier to do sanctions screening because of the programmability, right? These are solutions that even the private sector is trying to do, working sanction screening into digital currencies. So you can imagine that there could be a trade-off. Now, I can't say whether it's going to be all this or all that, because we don't know how this is going to play out, but we shouldn't underestimate that there will be some positive factors as well.
Thank you so much. Ms. Friedlander, in your testimony, you said, quote, of the 4 historically most influential central banks in the world, the United States is furthest behind in the work on digital currencies. Furthermore, absent leadership, you went on to say the U.S. could miss out on an opportunity to foster financial inclusion, increase cybersecurity, and maintain dollar dominance. However, you also said that, quote, there are upcoming opportunities for the U.S. to play catch-up. Would you elaborate on those opportunities and what steps does the United States need to take to become a leader in digital currency infrastructure, please?
Sure, thank you. I mean, I think the first step would be to openly acknowledge that the United States is exploring and actively considering a central bank digital currency. Now, as I noted in my testimony, that doesn't mean that we actually have to deploy one, but putting our imprint, again, as the U.S. as the sort of global financial actor of choice, right? And countries are coming to us and saying, can you help us design this? right? Using the power of our of our private sector as for design elements, but also our regulatory capacity in multilateral fora to put together a framework among allied countries that then, quite frankly, gives China a bifurcated choice, or close to one, right? Do you join the international community and multilateralize, or do you use this as a force of internal control, as Yaya often argues?
To that point, do you think there's a tipping point where we've waited too long or too far behind the Chinese or others to lead in this space, or you think we've got time here?
I think we have a limited amount of time, and I think as I answered the chairman's question, right, look for cross-border use cases of the digital yuan, and this is one benchmark I think that was noted in the briefing memo ahead of the hearing is BRI, right, using digital yuan as a method of debt repayment for individual countries, right? So if those are starting to become effective, if countries are saying, okay, we're turning to China as a model for how we build this, and not to the United States or not to partner countries like the UK, right?
Thanks so much for the answer. Yield back. Thank you.
Gentleman yields back. The gentleman from North Carolina, Mr. McHenry, ranking member of the committee, is now recognized for 5 minutes.
Thank you, Mr. Himes. Mr. Baldwin, the theme of today's hearing, the promises and perils of a central bank digital currency. So this leads me to a fundamental question. When we look at what they've done in the Bahamas on the sand dollar, they were trying to solve the movement of hard cash, a physical asset, among 700 islands. So that's what they were trying to solve. What are we trying to solve with the U.S. central bank digital currency, in your view, Mr. Baldwin?
At its core, we're looking to solve the issue of faster and cheaper payments.
Okay, faster and cheaper payments. So is the Federal Reserve the place to do that?
The Federal Reserve has the ability to do that through a CBDC approach. There's also private sector approaches that could also work, such as a stablecoin.
Okay, so Mr. Fanusie, you've written in one of your papers, China's digital currency. You explain that the CCP, the ECNY, will enable the CCP to yield punitive control power over Chinese citizens in tandem with the social credit system, right? So explain that to us.
Well, it's because the ECNY, the digital yuan, is just one small part of a broader data strategy that the CCP has. It's really about integrating all aspects of data, everything that the government can have its data, can gain data from, and to utilize it. And whether it's, we think the social credit system, whether it's, anti-money laundering, political corruption and graft, they're trying to develop a system where the government is able to use that. And the key thing is that right now is to use financial infrastructure in a way that right now is a little bit, it's not as streamlined. So if China now wants to...
But you said punitive.
Yeah,
what do you mean by punitive? So this isn't just data flows and we want to analyze it and understand our economy. Could this potentially be to disappear someone, to freeze their assets?
It's possible if that's what the state, the Chinese government wants to do. Yes, very possible.
Okay, so we know the story of H&M disappearing from all digital aspects in China overnight, out of criticism. We've seen what happened to Jack Ma. We've seen what happened with Didi. And these are very public things that we know about as Americans. So, Mr. Baldwin, Mr. Fanusie outlines how the ECNY will give this heightened level of information about citizens. In our system, our civil liberties protections are broadly different, and our assumptions as Americans are broadly different. So how do we protect that if it's an entity of government having those data flows, account-level data flows?
Yeah, personal-level information needs to be anonymized on the system.
Okay, so could stable coins address this? A variety of different stable coins in a regulated environment, could you address some of these attributes of digital currencies?
Yes, so the approach I outlined...
Or a number of the attributes of a central bank digital currency.
The approach I outlined in my written testimony described several competing stable coins. So this information is going to be spread across multiple private sector entities. And from an on-chain blockchain perspective, the consumer data would be anonymized. So you'd be seeing wallet transfers between the different wallets. So that would completely anonymize consumer information.
Okay, so right now we have a payment system domestically. We're talking about the Fed and the clearinghouse having redundancy, having two payment systems, right? This raises to me a question. Could a variety of stable coins can create a competitive force, market force, domestically? They could get to the question that Mr. Levine raises about really the payments for the barber shop. Is that are there attributes of a stable coin that could better do that than a central bank digital currency?
A stablecoin could be implemented on top of current infrastructure. So it could speed up in the back-end settlement processes. So if you're looking at a retail provider who is using a Square app, and that's having a 3% fee, a stablecoin provides the ability to accelerate the transactions and lower the cost on the system. So it would provide benefits.
Okay, but this is a fantastic panel. Mr. Chairman, thank you for this balanced panel because Mr. Fanusie is talking about the international implications. If we don't move as Americans, international settlements, remittances could go to a regime that we'd not like. But domestically, Mr. Levine raises this question of payments and the cost of payments. So what I'm hearing from this, and tell me if any of you disagree, that we have two separate issues we have to wrestle with, a domestic question and an international question. Does anyone disagree with that? And therefore, we could take two separate approaches on international and domestic. Anyone disagree with that? Okay. I would love to hear your comments in written form, if you would, about the nuances of what I've missed. But my time has expired. But Ms. Friedlander, I would love to hear your comments in written form. Thank you, Mr. Chairman.
The gentleman's times are expired. The witnesses are invited to respond to the ranking member's question in written form. With that, the gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Chairman Himes, and thank you to our witnesses for sharing your expertise with us today. Ms. Friedlander, and I'm thinking in terms of my own constituents in the Pennsylvania 4th, so suburban Philadelphia. This might all sound like gobbledygook to them. Could you help me out and describe more specifically how a central bank digital currency can help expand financial access to them, to some who are underbanked, unbanked, to some who are poor, to minority communities who are struggling with access to financial institutions?
Thank you, and I'll try to get at the Congressman's question in the course of this. The central bank digital currency or a fiat-backed stablecoin, right, both have the ability to accelerate the pace of payments. Think about if you're trying to move money from Bank of America to Chase or whatever, it takes days, or never mind internationally, right? And this has turnover costs and deadweight loss for the broader economy. What you're saying to an underserved individual is that you are going to have negligible or no cost of transaction, and you will be paid either from a financial service provider or if you're receiving government benefits instantaneously overnight.
Thank you very much. What lessons, Ms. Friedlander, could we learn from the design of other CDBGs like Sand Dollar in the Bahamas?
I mean, I think it's important to understand that each country is designing and implementing a CBDC for a different purpose. So in the case of the Bahamas, as you note, it is a financial inclusion issue after natural disasters, getting payments to individual islands at rapid speed. If you're talking about a country like Sweden, for example, which monitors an autonomous currency that's pegged to the euro, it's more of a question of what is the role of a cryptocurrency or a stablecoin going to play in monetary policy, monetary sovereignty. For the United States, it really is that question of speeding up the speed of transaction between financial service providers. We have a very complicated financial system in this country. It's regulated on federal level, on state level, on local level, and providing some clarification on that and streamlining will be very valuable to the consumer. And I'm sure that some of my colleagues here might agree and elaborate.
Okay, terrific. Dr. Coronado, in your testimony, you touch on the idea, and this is something that I had introduced during the COVID pandemic and the economic collapse, of automatically triggered quarterly economic impact payments in times of a financial downturn. Others on this committee have been working through some other types of automatic payments. You touched on this in your testimony as well. With your concept of recession insurance bonds, could you describe what design features CBDG currency could increase the ease, the ability for federal government to supply payments to the American people to the point that Ms. Friedlander was just making?
Thank you. Yes. So we've seen that cash payments can be very effective in stabilizing demand in the economy. Having a CBDC and a system of digital accounts that's more inclusive would mean that it's almost instantaneous, that you could get cash to households, and that you would have certain, Congress could provide the structure in terms of limiting it as a percentage of GDP, or requiring certain triggers, like first the Fed must cut rates to zero, some kind of recessionary indicators, but that then you could get those cash payments out. And I think one of the things we also believe is that that might also reduce the need for the Fed to engage in market interventions like buying corporate bonds or some of the extraordinary facilities that were developed during the COVID crisis. If investors know that cash is going to households and that demand will be stabilized, then one of the benefits is that that will calm markets as well. So it will benefit both consumers and probably limit the need for both the Fed and Congress to act in other ways.
It's an important reminder of the important stimulus that we did send out through CARES and other measures, and then, of course, with the American Rescue Plan and how that cash is helping stimulate the economy. Dr. Levin, I'll end with you. Sorry, I have very little time. Could this system of CBDCs be useful in small businesses at times of economic downturn? You were talking very much about these very traditional entrepreneurial small businesses. So households, small businesses, economic downturn, how does CBDCs play into that?
I think that it was tragic last year when the pandemic hit and Congress acted very quickly and appropriately to try to help people who were thrown out of work and families that were hit really hard. And yet, because many of those people were unbanked, there were weeks that went by for those checks, paper checks, to be sent out by Treasury in the mail and for people to receive that check and then have to find somewhere to cash it. Okay, that was very sad. We have to make sure that doesn't happen again the next time around. Okay, so I think, again, part of this urgency here of creating a digital dollar is to help make sure that when there is that kind of economic or financial emergency or public health emergency, that we can get assistance quickly to small businesses too, of course, because
The gentlewoman's time has expired.
Yeah, sorry.
I thank you, Mr. Chairman. Thank you very much for your testimony.
Gentlewoman yields back. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank all of our witnesses for coming before us today to answer some of our questions about digital currency and to give us a better understanding of the costs and benefits of creating a new form of the U.S. dollar. I'm in the car business. I need to know this. And it seems like if we move forward with creating a digital currency, that it would need a lot of additional background support. And the Bureau of Engraving and Printing alone has 1,500 employees, from support staff to the energy and computing power to the cybersecurity necessary to keep all the infrastructure secure. This does not appear to be a simple endeavor. And I want to try to get an estimate of the cost making this a reality. So, Mr. Boyden, how big of an expansion of government would it take to create a functional digital currency?
It would require a large stand-up at the Federal Reserve or an operational office such as Treasury's Fiscal Service.
Bigger government?
Larger government.
Okay. The private sector already has a few different stable coins that mimic what the Federal Reserve is considering creating. Whenever I hear the government's going to come in and create a competing or a competition or product or provide a similar service to the private sector, it really makes me wonder if it's necessary for the government to get involved at all, because sometimes that really messes things up. So, Mr. Friedlander, can you talk about what is necessary for the Federal Reserve to create a digital currency when there are already alternatives in the private sector?
I would argue that there's a bit of a false dichotomy, perhaps, between an either-or scenario between a CBDC and a stablecoin. There are feasible uses for each that would fulfill different roles in the U.S. economy. So So if you're talking about retail sales, maybe you want to use a stable coin. You're paying for something. But I find it hard to imagine that receiving government benefits would be effectuated by a private entity like that, and would be much better served by the central bank, by the Fed. That isn't to say that the private sector wouldn't be key in the design and consumer framework for implementing and deploying a CBDC. So what we're really looking at is a complementary ecosystem here where both can serve efficient purposes.
Okay. I've met with some companies and organizations that in my district back in Texas that have described how cryptocurrencies are already transforming the payment space. I spoke with one individual that was about to transfer some of his wages into digital dollars and send some of his earnings back to his family in Honduras. This cross-border transfer able to happen quickly and without any high fees. All of this innovation is happening in the payment space without the government having their own digital dollars. So, Mr. Baldwin, do we risk stifling some of this progress if we were to create our own digital currency?
I could see the two processes working together, but ultimately private sector innovation has led to the back core technology that's enabling the discussion that we're having today. It is the Bitcoin's blockchain technology which has allowed the potential for a CBDC and a stablecoin approach. So it's private sector innovation that's developed these new technologies that we're leveraging for more noble purposes.
Private sector is still the best, isn't it?
Yes, sir.
Well, thank you. And Mr. Chairman, I have a little bit of time left. I yield it back.
Gentleman yields. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and to our assembled witnesses. As I was reading the material for this and hearing your testimony, I found the case for CBDCs for geoeconomic and strategic purposes very compelling. And I understand why the United States needs to catch up, both to retain its economic leverage, to maintain the US dollar as the reserve currency. This makes a lot of sense to me. I do have some significant concerns about domestic use cases for CBDCs. And I think as a starting point, Ms. Friedlander, I'm wondering if we can have a two-tiered approach here. If we could move ahead with a federally controlled digital currency for use internationally while holding back on any domestic use cases until we can do more interrogation of that. Is that even a possible path forward?
Potentially, but I would say that looking at the countries that have that are further along than we are, this is a revolutionary technology in the financial world. That working it out domestically is a much more sort of biting things off as you can chew on a regulatory front, especially when you want to then proliferate US-based standards internationally. And especially if the US dollar maintains its role as the global reserve currency, you're going to want to define those standards at home before you deploy them abroad. So I would say probably I would not necessarily advise that approach, even if it were technically feasible.
Do any of the other witnesses disagree with that assertion, or does anybody have anything further to add? Dr. Levin, if you could be in the next 20 seconds.
I'll try to be brief, sorry. But I wanted to connect this to what Congressman Williams said. Ordinary families actually like using US dollars. Okay, just an example of this, the Norwich Farm Creamery, all of their products, ice cream, milk.
Dr. Levin, I apologize, but I want to get directly to the question I asked, though, whether it would be possible to proceed internationally without a domestic use cases.
It does make sense to start domestically, okay? Introduce a currency that's held in wallets that a lot of people start using, and that's instant and free. And then you would develop the cross-border transactions to facilitate international.
Mr. Fanusie?
Yeah, I'll just add, I think it's a practical question. It's if we're going to go to international discussions, what do we bring to the table? Other countries, China, what do they have? You think about all the pilots that they have. With those pilots, there's a massive amount of data and analysis. They're learning, they're iterating. So if we are in a forum and it's a bunch of countries across the table, central banks, and China puts all this data, all these examples of how its trials have worked domestically, well, what do we have? Just theoretically how things should work?
Wouldn't we have that we are currently the reserve currency, and thereby there's a tremendous benefit of adoption of the digital dollar?
Yeah, but so you're right. So there was always going to be a place at the table for the U.S., right? The Fed's going to have a place at the table. We will have a place at the table. But I say as a practical matter, right? These are computer science and data issues. How can we would have to really be able to get into the weeds about models, about proposals, and there are a whole bunch of policy questions that you have to answer because you start doing the technical research.
So then taking that as a jumping off point in this final minute, Dr. Coronado, my principal concern with the domestic use cases really is the blurring of the line between monetary and fiscal policy. I think this builds on what Mr. Barr was alluding to before he ran out of time. As I was reading some of these memos with these direct monetary transfers, for example, from the Fed to individuals, I mean, this strikes me as fiscal policy, not monetary policy. And I just have real concerns about an organization as insulated, and it's designed as such, but as politically insulated as the Fed, taking over fiscal policy from Congress.
Let me clarify. I don't think it's fiscal policy. I think it's a better form of monetary policy. That line was already blurred during the COVID crisis when the Fed extended direct lending to a number of sectors in the economy and crossed a number of lines because the economy required it. And what this would do is just give them a better tool to get at the root of the problem, which is consumers themselves. Why do you need to stabilize markets from going into tailspins? Because markets are fearful of consumers, of the economy collapsing. So if you can provide that backstop, and again, Congress can write the rules here, you can put guardrails on this, but it is classic monetary policy. It is Milton Friedman's helicopter drops. So I don't agree that that's the critique here. It's just money creation in a far more efficient way, and I will bet that we will not have to expand the balance sheet nearly as much if you give the Fed a tool like this. $4 trillion we've expanded it over the last 18 months.
I'm out of time. Mr. Chairman, I yield back.
Gentleman's time has expired. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
I thank the chairman. Thank you for the witnesses, and it has been a very good, diverse, and interesting panel, and we appreciate everybody's participation. I've certainly been talking about this concept of a central bank digital currency for over 2 years now, and trying to ask the best people around the world to think about it. In 2019, my friend on the other side of the aisle, Bill Foster, and I wrote the Fed and the IMF about what they considered, what their initial views were on a central bank digital currency and what their efforts were to move it forward. And I think Mr. Foster and I were in summer of 2019 found they were not interested. I think now in the summer of 2021, you see significant work. And as a result, we introduced legislation together, H.R. 2211, Central Bank Digital Currency Study Act earlier this year, which would require a study and report by the Fed and other U.S. financial institutions about the impact of a digital currency might have on our financial system and the economy. And we certainly look forward to that bill moving forward. Likewise, I've introduced legislation with our chairman, Mr. Himes, H.R. 3506, the 21st Century Dollar Act, to make sure that the U.S. government has a strategy to ensure that the dollar remains the primary global reserve currency. And clearly the topic we've had today indicates how this will play some future role in that. The international standing of the dollar should always be at the forefront of our minds in the development of a digital currency, whether it's a CBDC or some other kind of stable coin option. I'd like to ask my friend, Mr. Himes, if our bill, H.R. 3506, and Mr. Foster's bill, H.R. 2211, if he thinks those might be eligible for markup in the House Financial Services Committee.
I thank Mr. Hill, and I think both bills are important. They're bipartisan and forward-looking, so I will push the chairwoman of the committee to bring them forward.
I thank my friend from Connecticut and for his leadership of this committee. Personally, I'm concerned about this direct account issue. I'm not there yet. I like the idea that there's a blockchain pay rail out there, and that it's a dollar-based digital currency that America's Congress and Fed Treasury have authorized. So but I'm still thinking, and I'm open to what those intermediaries on that blockchain rail look like, but I'm not yet sold on the idea of direct accounts personally. But this conversation is a big part of that thinking, and as I said, I'm grateful for your contributions. Mr. Baldwin, do you think it's important, as we think through the central bank digital currency idea, that we make sure that the dollar, that is a strategic part of the discussion, that the dollar, we work to make sure it remains the reserve currency for the world?
Absolutely. The dollar as a reserve currency of the world provides us so many benefits, ranging from the ability to conduct fiscal policy on an expanded basis, in addition to our sanctions authorities.
And with your experience at the Treasury, I know you've studied the uses of blockchain from a national security point of view as well. And in the past, blockchain analytic tools have been successfully employed by cryptocurrency businesses and financial institutions to mitigate risks related to traditional cryptocurrencies and enable them to meet their AML currency reporting transactions. Can you talk a little bit about that?
Yes, I mean, it's an example of private sector innovation. The blockchain space has been around for approximately 10 years, and when it first came out, there was a number of questions surrounding how we'll be able to trace these things, but the thing is, they're all on a public ledger. And as a result, there's been a number of firms that have stepped up to the plate and have developed the capacity to go and analyze blockchain transactions. And they're able to follow the on-chain transactions and find flows to elicit bad actors. It's in the case of the Colonial Pipeline incident in hacking, the FBI was ultimately able to track down the funds and recover them.
And likewise on sanctions circumvention, that's been a good topic today. We've talked about that. The same is true there, where blockchain analysis can be used to not allow sanctions to be violated.
Yes, analysis of host wallets that are in foreign countries, such as Iran or North Korea, could track payments and prevent payments from going to certain places.
I thank the chairman. I yield back.
Gentleman yields back. The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Mr. Chairman. A great hearing. Thank you to all of our witnesses. This has been very, very helpful. Dr. Coronado, you mentioned in your opening statement that the way that the U.S. dollar became the global reserve currency is a long story, and it really it involves a lot of factors. I would suggest that one of those factors is the ability of our government, the rule of law. Mr. Chairman, I'm getting a lot of interference. Is there something wrong with the technology?
We'll just suspend the clock for a moment. Let's see if we can improve the audio quality, or at least the volume.
Yeah.
Mr. Lynch, we'll give you back 15 seconds. Could the witnesses hear Mr. Lynch?
Barely.
Okay.
Dr. Coronado.
Yes.
One of the reasons that we have the global reserve currency in the U.S. dollar is because of the rule of law that we have here in the United States, independent judiciary. There are a lot of reasons that people trust the dollar, including the reliability of our elections and the fact that we have a peaceful transfer of power every 4 years. So when we talk about a digital yuan versus a digital dollar, and we recognize that China probably has more data on their individual citizens than any nation on earth. Facial recognition widely used for oppressive reasons. This digital yuan would give China a more granular level of surveillance of financial activity in their country, would it not?
Yes.
So, Mr. Baldwin, how do you think we post up when we compare a potential U.S. digital dollar versus a Chinese yuan, digital yuan?
The the U.S.'s system overall is much more attractive to international partners. We have rule of law, as you mentioned. We have settlements in courts. And we also have a history of responsible monetary policy. The Chinese Communist Party has a lot of structural issues with its potential digital yuan. That includes concerns about monitoring, concerns about overstep in controlling payments going to certain individuals, and even structural issues such as capital controls.
Very good. Now right now we have about 200 stable coins that are available, the most popular anyway. All of those are pegged in some way to a more stable fiat currency. And the recommendations of the OCC and the SEC were that there should be a one-to-one digital stable coin to a stable fiat currency, such as the US dollar. But recently we discovered that Tether, which is one of the most popular so-called stable coins, their reserves are being held in commercial paper, which we have seen repeatedly, the liquidity of which disappears in times of stress. So, Mr. Baldwin, or perhaps Dr. Coronado, is it important the way we design this? And I know it's taking more time than any of us would like, but is it important that we try to, I guess, include that stability that the dollar enjoys in the design of our digital dollar?
Yes, the design of a stablecoin is extremely important, and the reserves backing it and the auditing standards of those reserves are extremely important. The company you mentioned operates as a money service business. That's a state-by-state regulatory authority that doesn't have as much scrutiny as a traditional financial regulator would. In the state of New York, the New York Department of Financial Services oversees stablecoin regulations, and you see much more responsibly reserved firms providing stablecoins in that state.
I'll add that I don't see any benefit from not having full reserve backing from a Federal Reserve digital currency. If what we're looking here for here is the advantages of technology combined with stability, why would we not have 100% reserve-backed digital currency, and then what the providers, the stable coins provide is the innovation on the technology front?
Thank you very much, Mr. Chairman. My time has expired. I yield back. Thank you.
Gentleman yields. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks for holding this hearing. Appreciate our witnesses. And, you know, as we just where Mr. Lynch talked off, the architecture and design is very important. We all recognize the importance and frankly, the power that it gives the United States to have the world's global reserve currency. As I listen to people put emphasis on that, though, I wonder whether each of our witnesses thinks it's more important that the U.S. dollar is the global reserve currency or that the United States has sound money. Sound money or global reserve, Mr. Baldwin?
I think they operate in accordance together.
Dr. Coronado?
Yeah, they go.
That's why we became the global reserve currency. Dr. Levin?
Yeah, I agree. In fact, just to elaborate on what Dr. Coronado said earlier, we need to
sound money or sound money. This is not, okay, not an essay. Sound money or global reserve.
I think, again, they go hand in hand.
You want them both. Okay, Dr. Fanusie or Mr. Fanusie?
I agree. Sound both.
Yes.
Yeah. Okay, we want them both. All right. You know, we could really debate whether we actually have sound money tonight or not, but I think we're doing a nice sample pack of modern monetary theory. There is no lender for this, you know, helicopter money that Dr. Coronado referred to. We're actually destroying the dollar, which is why there's been an interest in things that aren't US dollars. It's created asset price inflation in our stock markets. People have fled cash reserves for anything but cash. Wise folks have recognized, Ray Dalio said it, well before the coronavirus, cash is trash. Not because the US dollar is bad, but because the monetary policy is bad. We're destroying the dollar. With our fiscal policy, and Dr. Coronado integrating fiscal policy with it is horrific. So the real question is, when you look at what's happening with the central bank digital currency, some of the aficionados for this, when I hear Mr. Fanusie laud the Chinese, and it almost seems like there's a coveting of the power that China would have by being able to create this really creepy surveillance tool, by being able to know everything about every person, and including every transaction, and frankly, the ability to filter those transactions for the power of the state. I guess if you're a statist, you would actually love that tool. And if you look at the things that Dr. Coronado is talking about, and Dr. Levin referenced, to perfect the monetary policy, you could give the Fed more power than they already have as the most powerful central planner that we have to distort the economy. And frankly, if you want to perfect negative interest rates, you make sure that people can only hold digital currencies, because you can destroy the holdings. You can put expiration dates on people's dollars. So these are tools that people are proposing. They're not said here in public, but they have been mentioned at the Bank of International Settlement. So, you know, this is not something that I think we should seek to do, is empower the central bank to do these things. So when I think about how did we come to have this conversation, we largely had it because someone under the pseudonym, or some people under the pseudonym, Satoshi Nakamoto, created Bitcoin. It made the blockchain secure architecture, widely known and widely used and very attractive for its features. And so when I talk about the features, it's a true distributed ledger technology. It allows some level of privacy. And as we've talked about the challenges for the payment system, all these things are already happening, Dr. Levin. They're already happening. They're happening without a central bank digital currency. That's part of the beautiful nature of crypto. Stable coins like Paxos Gold, for example, are stable, and we don't have to have Federal Reserve accounts. They track the value of gold. So if you look at this, let me just go down the line quickly. Is the permissionless nature of Bitcoin a feature or a flaw? Mr. Baldwin.
A feature.
Dr. Coronado. Don't know. Dr. Levin.
Bitcoin is expensive to use and it's slow.
Okay, so you see it as a flaw, Mr. Fanusie?
It's a feature and a flaw. Can be a flaw, yeah.
Okay.
Same feature and flaw.
Feature and flaw. Okay, so it's not a perfect tool. I don't think that the Fed's going to perfect it unless they find a way to keep it permissionless. I yield.
Gentleman yields. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. COVID-19 has shown us the fragility of the American social safety net, a fragility that stems from a lack of automatic stabilizers. A CBDC, it would seem to me, would fill a critical void. It would radically reduce the length and depth of future recessions. It would bring instantaneous stability to hundreds of millions of Americans in times of economic instability. I know there are concerns, but it seems to me the system-wide stability that it would bring outweighs all the cost. Mr. Levin, do you have any thoughts?
Well, I just want to say again here that for decades, normal people and small businesses used U.S. dollars. We had stable money, okay, not all the time. We had a Great Depression that was horrible and prices dropped 30%. It's critical for the Federal Reserve to be able to make sure that never happens again, okay? But people like being able to use dollars. I think the Federal Reserve can create a digital dollar that people who want to can hold it and use it. We believe in civil liberty.
But my question is, would it make the economy more resilient? Would it?
Yes, it would, of course. Okay. We talked about this before. And it would help make sure that emergency assistance to families and small businesses.
And I just want to interject for a moment. What are the benefits and cost of a one-tier CBDC model versus a two-tier model?
Okay,
As succinctly as you can.
Okay, please, I'll try. I think it's critical to have a public-private partnership, which is what maybe you're referring to as a two-tiered system. The Fed creates reserves that the wallet providers can hold, 100% reserves, okay? But the wallet providers are competing with each other, okay? In that sense, it's not so far from what Mr. Baldwin's described as the stablecoin kind of competition, except every stablecoin has 100% reserve backing. They're all called digital dollars, okay? They don't have to be called stablecoin 1 and stablecoin 2, but that's tier 2, and that's the best system, public-private partnership with competition among providers.
One of the pillars of America's prosperity is the primacy of the dollar. What implications would the rise of CBDCs have for the dominance of the dollar, and what does that mean for the American economy in the long term? Mr. Fanusie, do you have any thoughts?
Short term, long term, and it depends on how we navigate the CBDC environment. I think most of us actually agree that CBDCs in the short term aren't going to, especially the economists, that aren't going to displace the U.S. dollar for all the reasons that we've been discussing. And I think the broader issue is how will we, what will be the role of the dollar in an environment where there are CBDCs, that they proliferate, and that they're more popular for cross-border use. You could think that maybe the Sputnik moment would be, if we're going to look for one, the Sputnik moment might be when we see those first retail CBDC to CBDC transactions happen successfully, not just in quote-unquote in the lab.
I want to interject. Cybersecurity. In the first half of 2021, we've seen an explosion of cyber crimes in general and ransomware in particular, the Colonial Pipeline, JBS, even the New York City Law Department. Cybersecurity Ventures projects that the cost of cybercrime could reach as much as $10.5 trillion by 2025. What impact would CBDCs have on what appears to be the exponential trajectory of cybercrime and ransomware? It seems to me the use of centralized ledgers in particular by authoritarian regimes would be a dream come true for cyber criminals. So what does this mean for cybersecurity? Mr. Fanusie, do you want to?
It absolutely raises the risk. This is probably one of the features that hasn't been studied because we're at such an early stage of discussing CBDC design. But this would be absolutely one of the most critical risk areas.
Can I add, though, that it's also an important benefit? Because right now, what we've seen both through the cyber attacks and the lack of payments in the crisis is that we don't have a digital infrastructure. And allowing the Fed or mandating that the Fed move forward with a digital currency would require an investment in that infrastructure that would bring huge benefits. We don't have best practices. We don't have resiliency. We don't have agencies that are tasked with this. And that leaves us more vulnerable, and it's sort of multiple agencies and the FBI getting involved. If the Fed is backing a digital currency, you can be sure they're going to have a lot of investment in the resiliency and the technology.
My time has expired. Thank you.
Gentleman yields. The gentleman from Texas, Mr. Sessions, is recognized for 5 minutes.
Mr. Chairman, thank you very much, and to our panel, thank you for taking time to be with us today. Mr. Davidson led us through what tried to be a lightning round, so perhaps I want to continue that. Dr. Coronado, is this about the underserved, the new generation, or an international race?
All of the above.
Today, we have, by and large, through the central bank and through the free enterprise system, something that we have a system that is safety and soundness. It sounds like to me, as we aggregate all this, that someone would have an account through a transaction. Does that extend credit to them also?
In our proposed system, it would not. It would be limited to retail payments only. There would not be credit extended. It would not be a fractional reserve system.
So in other words, what you're suggesting is that the cash that exists in the account or on a card would be what they would be extending.
Yes.
The opportunity then sounds like to me that the risk to the central bank is low.
The risk to the central bank from?
Well, you can only have an account with money in it, and you can only exchange the money that you have.
Right.
So this really is, in my opinion, as you suggest, it is for a new generation.
Right.
It is for the underserved, and it is to make sure that the American system would be one that's resilient, but that would be based on day-to-day opportunity, not long-term spending.
Correct. I do definitely see it as an enhancement to safety and soundness, that we don't really have a choice. We're losing it as we speak.
So in other words, really what this is about is to make sure that we hear these stories somewhat, or I have in my past, about Africa, that you've got a good number of people that may be out in a rural area. They still need to be able to have transactions. That's really what this is about. You spoke about what is the biggest challenge. What is the biggest challenge?
To implementation?
You're the one that said we have the biggest, earlier in your testimony, you referred to a big challenge.
So I think the big challenge right now is the lack of digital infrastructure, and that the world is moving ahead while we're standing still. So both in terms of the cybersecurity issues and the payment innovation issues and the global transaction issues are all moving ahead, and we're not moving with it. That creates a great challenge to safety and soundness, both domestically and the reserve currency status that we enjoy. So I don't think it's an option to stand still. I think we need to be engaged, and not only be engaged, but play a leadership role in this.
Would you see that as the maturity of this takes place, that a person who's in an underserved area or who does not have an account would walk into a bank or a credit union or some financial institution and just like use it as a gift card, that it's a one-time use? Is that the way you see this?
Well, there's a lot of, there's different ways. I mean, there's the account-based, in which it would be a transactional account where you're moving the money around different accounts, and then there's sort of a token system. I think the sand dollar has both, and you could do a system of both. I think that primarily the U.S. would be an account-based system, just because you're going to need that, those digital payment providers to provide some of the know your customer and anti-money laundering oversight for these accounts, I think, but there could be an additional sort of tokenized card feature to it as well.
Good. I think this clarity's been very good for me to understand actually that it would be something where someone would have an account. It would be offered with or with the bank, but it would be an account that we would not be extending credit, but it gives them an opportunity to use it in the marketplace. Mr. Chairman, thank you for the time, and I thank the gentlewoman from Texas.
Thank you.
The gentleman yields back. The gentlewoman from New York, Ms. Ocasio-Cortez, is now recognized for 5 minutes.
Thank you so much, Mr. Chair, for convening this hearing, and thank you to our witness panel for being with us today. I want to take the time today to explore some of the implications of central bank digital currencies for folks kind of following at home. A digital dollar would resemble in certain ways cryptocurrencies such as Bitcoin or Ethereum in certain limited respects, but differ in very important ways as well. Now, Dr. Levin, rather than a tradable asset with wildly fluctuating prices that we see in certain crypto markets, and limited real life use as a currency, a central bank digital currency would function more like dollars and have more widespread acceptance, presumably, correct?
Right. The point is that with a central ledger in an electronic world, you can have instant, free, secure transactions.
Great.
That's why, I mean, coming back to this other thing, when I think about digital world, like cell phone, we don't say, well, is this for work or is it for home? You know, it's for everything, and so it's all the above. And so absolutely, having a free, safe, secure, instant transaction platform that every American can use is what we should have had already, and we need it now.
Thank you. And just to clarify, it would also be fully regulated under a central authority, right? Yeah.
So I think there's been some agreement among a number of us at this table that these should be 100% backed by reserves held at the Fed. So there's no concern that the stablecoin provider might go bankrupt. Okay, and then there's a panic and people
Thank you.
are
I'm sorry, I just have limited time. Now, economists like Claudia Sahm have, and as we've heard throughout the hearing, agree that direct stimulus payments, like the checks that Americans received during the pandemic, can shorten recessions. And although stimulus payments helped stabilize the economy during the pandemic, delivery was sometimes slow. And even the IRS and the Treasury just announced last week that 2.2 million stimulus payments were made in late July. These were the stimulus payments that people got months ago after the original passing of the American Rescue Plan. Now, this is not because of some technical, payments getting lost in technology or bureaucracy. It's because the most vulnerable people in our society are hardest to reach. People who don't have consistent mailing addresses, people who are unbanked, a lot of times because it's too expensive to be banked, people who don't file taxes because they make too little money. And these are real issues. And so my question is, with the CBDC, it's all about the design. It's not just the idea, it's the execution, design, and implementation. And my question is, in that similar vein, what would make a well-designed CBDC system that helps overcome some of these existing issues that we have seen with banks and with just the delivery of stimulus checks? Ms. Coronado?
So one of the key pieces of the design is that the lower income households should have no fees whatsoever to engage, and that some of the technology access questions would be part of the infrastructure that's built. Whether that's a digital card that they're provided or kiosks, some sort of access to their accounts that is free and built and available to them to engage in the transactions.
Got it. And there has been some discussion, even most recently, and we heard in the last few minutes, about two-tier systems. And Dr. Coronado, in your testimony, you say, quote, preserving a two-tier system of private providers would promote competition and continued innovation, while Fed oversight would promote that safety and soundness. Now, by two-tier systems, you're referring to how certain banks like Wells Fargo, Bank of America, JP Morgan can bank with the Federal Reserve, but regular Americans cannot, right? That's what you're alluding to? Okay. Now, I just want to be clear here, just for clarification. There is no legal, technical, or operational requirement as to why banks or private payment companies need to be involved, correct? In other words, the federal government could provide public digital currency services directly to the public if it wanted to, like the Postal Service provides
bank. Sure, yes.
money to. Okay, thank you. Now, I think one of the things that we're seeing here is that we're facing a choice. Congress is facing a choice, whether we want to give, Wall Street another tool of being in charge of the public's money and payments, or whether we can potentially establish a public option here as well. Now, one concern that we hear in CBDC conversations, my time is up. I'm sorry, so I can't get to the last question. I'll file it for the record. Thank you.
The gentle lady yields back. The gentleman from Minnesota, Mr. Emmer, is now recognized for 5 minutes.
Thank you, Chairman Himes and Ranking Member Barr, for hosting this hearing to discuss national security, privacy, and competitive implications of a potential United States digital dollar. As we carry on these discussions on and off the committee, we must not forget that the benefit of having a digital dollar would only come to fruition if it were open, permissionless, and private. Any attempt to craft a central bank digital currency that enables the Fed to provide retail bank accounts and mobilizes the CBDC rails into a surveillance tool able to collect all sorts of information on Americans, would do nothing other than put the United States on par with China's digital authoritarianism. Our banks and fintechs, that's okay, you can laugh, but it's real, and it's happening. You talk to the Chinese, what their government's doing to them. Our banks and fintechs are doing a great job serving their customers and expanding access to financial services. It's the competitive marketplace of the private sector that facilitates that achievement. For this reason, I am deeply concerned by Chair Powell's recent comment before the full committee that the strongest argument in favor of central bank digital currencies is that, quote, you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital U.S. currency, close quote. Our government should never be in the business of designing a tool that will wipe out an entire innovative private market, a market that creates far more capital and provides far more high-tech jobs than the government will ever be able to do. More than anything, cryptocurrencies, stablecoins, and other private market blockchain innovation open doors to immense opportunities for Americans. These decentralized projects have an underlying code that is open source, meaning anyone can find it, study it, verify it, and build projects on top of it. It is in this way that crypto and blockchain expand opportunity for everyone, whether that's financial inclusion or capital formation or tech innovation. With cryptocurrencies, no one has to ask a bank or a corporation, or perhaps most importantly, their government for permission to start a project or launch a business or get a loan. That's the way it should be. And by the way, it's interesting how cryptocurrencies have grown as government seeks to grow ever bigger and try to make decisions for the public. The size and scope of government versus a right of an individual to self-determine is exactly what is pushing the development of this area. And it's great to have all of you here and talk about this wonderful topic. But I'll tell you, if we don't start to figure this out and get ahead of it, this market's going to happen with or without us, and it's going to happen here or somewhere else. So, Mr. Baldwin, why don't I start with you? In your testimony, you mentioned that international competition is decreasing in the United States, in the United States' role in international finance, and that our lack of a CBDC plays into that. It's my belief that decentralized technology like cryptocurrencies and blockchain and the blockchain technology that they sit on, maintain a fundamental American principle. That is individual privacy, a free marketplace, and competition with innovation. Why should the Fed focus on uplifting private crypto markets and blockchain innovation rather than crafting a CBDC that wipes out this great industry, or has the potential, according to Chair Powell, to wipe out the industry? Specifically, can you touch on how a thriving crypto and blockchain industry in the United States could make the United States of America more competitive with respect to international finance?
I think the goal across this hearing is to promote faster, cheaper, and easier to use payment mechanisms. A private sector-led approach opens a lot of opportunities in areas such as micropayments. That's engineering jobs, that's jobs for salespeople, creating innovations such as real-time payments. So if you're an hourly worker, getting paid for the hours you work in real time, or if you're a music producer, getting paid for your streams. These previous transactions that are low cost were infeasible in our current system. So a private sector approach really promotes opportunities to innovate in different areas and have private developers see a need for it in the market and then go and develop the tool.
Mr. Baldwin, in the few seconds I have left, is there any reason in the world why a free market constitutional republic with free citizens able to self-determine should want to emulate a communist party-driven authoritarian type digital currency program?
The Chinese central bank digital currency approach has a lot of negatives in areas such as consumer privacy. Any approach the U.S. takes should make sure to steer clear and respect the privacy of the American citizens.
Thank you. I see my time's expired.
Gentleman yields back. The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Mr. Chair. If you're going to prevent digital dollars from being used for ransomware, money laundering, child trafficking, terrorism, you name it, is there any alternative to having a secure and legally traceable digital identity for all participants?
Not for the bulk of the transactions, no.
Does any one of you believe that a digital dollar that can't be abused in this way can be implemented without having every transaction tied to a legally traceable participant? So that's pretty much a precondition for a central bank digital currency, is having a digital identity system.
I think a question I think the Federal Reserve should look at, and other central banks are looking at, is could you have a $5 prepaid card that you could take up into the mountains?
So you do have de minimis threshold.
Yeah, de minimis, okay, but I think for sure once we're talking about
significant amounts, crossing borders especially.
Absolutely.
Okay.
Absolutely.
So that it seems like the starting point for this is to get a digital identity ecosystem working in our countries and then interoperable. Because if we wish to have an effective means of preventing this, we have to identify people and say, you cannot use digital dollars because you're an identified terrorist. Okay? Is that pretty much going to have to be a feature of any system, whether it's stable coins or anything else that cannot be abused?
I think in civil liberty, no one should be required to have that digital identity. But if they don't have it, then they can't use that system, right?
Right.
So
Okay, yeah, I agree. Does anyone disagree? Mr. Baldwin, anyone? So your members are on board with having every one of the transactions associated with a unique, legally traceable digital identity for the participants?
Any system needs to be in compliance with the Bank Secrecy Act.
That's obviously not enough to prevent a lot of the bad things that happen. I'm talking about having a legally traceable identity associated with each transaction.
Illegally associated, as long as it's in means with the rules set forward with FinCEN in association with
But FinCEN would like the rules strengthened, frankly, because there are a lot of holes in the current system and a lot of terrorism and child trafficking and you name it, ransomware. So it seems if you just look at ransomware alone, when your screen locks up and it says transfer X amount of your digital assets into this account, you have to be able to go to a court system you trust, find out who's behind that account, unmask them, and if necessary, get your money back. Is that a necessary feature of a system of digital dollars that can't be abused?
Responsiveness to court of law is an important feature.
Well, we'll get back to that. It seems to me that it is, and I think the rest is yes, Ms. Friedlander?
I would say an ideal system seeks to replicate the current KYC orchestration and system that we have with commercial banking now, right? And as you rightly acknowledge, there are holes in the system, there are things that should be strengthened, but there's a possibility to design this so that you would have the same access to information balanced by same privacy protections as you do under the current system. What I would acknowledge, though, is that illicit financial actors are, as you say, are very good at eluding the system as it currently is, right? So through complex legal structures, through high-risk jurisdictions, that's the bread and butter of money laundering. So, I think I would caveat when we say, that a digital dollar, whether it be, central bank-based or stablecoin, it doesn't necessarily say that this is an instrument designed for with the knowledge that it will increase our exposure to illicit financial actors.
All right, but we're going to need a mechanism to tell someone, I'm sorry, you cannot transact in digital dollars because we have identified you as a international gangster or you name it. We'll need a way to, or a terrorist. And so really, operationally, we will set different standards, but it's not different than what the Chinese are doing. The only difference is we are going to designate terrorists. We're not going to designate Hong Kong democracy protesters as terrorists, and they are. And that's really the only difference. We have to be able to exclude participants, and we have to uniquely identify them as well, so that you can't be operating multiple identities under in multiple jurisdictions. Is there really, it seems to me that's kind of non-negotiable in this.
I strongly disagree. I think that a key reason for the two-tier system we've been talking about is to protect privacy. so that you need a court order, a search warrant.
Oh, absolutely, yeah. There has to be a,
Which
no,
is
I'm
very
not saying
different from
everyone
China.
gets the info.
China, the government wants direct control of the
Correct.
data. We're creating a layer.
There has to be a mechanism to unmask participants when malfeasance is suspected, and there has to be a way to dedupe participants so you can't be using multiple identities in different jurisdictions. And that's not a feature of a lot of the stable coins and other crypto assets, and I think it's going to end up having to be. Anyway, my time's up and yield back.
The gentleman yields back. We're going to implement a very brief second round for the chairman and the ranking member to just clean up some questions. Mr. Foster, if you'd like, I'll kick off 5 minutes before recognizing the ranking member for 5 minutes by yielding 2 minutes to you.
That would be wonderful. Okay.
Well, I yield 2 minutes to the
I
gentleman from Illinois.
Yeah, thank you. This also becomes an issue for when we had to dispense stimulus checks. You know, the issue we had is we did not have a unique legally traceable identity for all qualifying citizens of the United States. There are products, there's a product called a mobile ID or a digital driver's license that is being dispensed by a lot of states. You know, 5 or 10 states already are actually using them. This thing, it's not a new database or anything. What it is, it just sits on top of the Real ID system, which pretty much is a unique legally traceable identity for all citizens, and then transfers that information to your cell phone. And that allows you to use your cell phone, your Real ID, to authenticate yourself online as a single legally traceable citizen of the United States. Is that an appropriate starting point as the identity credential that you will need to operate a central bank digital currency?
It's an intriguing starting point, sure. I mean, to the extent that you can use existing infrastructure for that, then it could create a lot of efficiency in terms of...
NIST has actually negotiated ISO standards for these, for interoperability. There are multiple vendors. Google and Apple have announced that they will support these digital driver's licenses. And so I'd be interested in your remarks, for your comments for the record as to whether those are appropriate. You know, if that was the de facto way that you authenticated yourself for using digital dollars, what would be missing in such a system in terms of preventing fraud and so on? And how useful would that be for dispensing things like stimulus checks or other federal benefits? Anyway, I am now pretty much out of time, and if one last comment, and then I have to.
So another big advantage of a two-tiered system is you can have nonprofit organizations that start to help ordinary people and small businesses use these digital dollars. So imagine that the AARP starts helping retired people, and they might have an app, or it's a card or whatever, a prepaid card that's big, that's got Braille on it, that's really great for people with visual or audio disabilities. Okay, there's an urban organization that's helping lower income people and disadvantaged people in communities. We can have different designs. The fundamental concept here of a digital dollar doesn't require that it all one paper identical bill. Okay, that there could be lots of competition and lots of diversity and helping a lot more people than the current payments.
I'm going to reclaim my time because I do have one question for Dr. Coronado. We were cut off. I'm very interested in something that we haven't talked a lot about, which is the potential adverse effect on the traditional banking system in moments of stress and crisis. And again, we talked a little bit about how you could cap the size of the accounts, but could I give you a minute or two to talk about what other mechanisms might be in place to make sure that we don't see a flight to safety and therefore an exacerbation of problems inside the traditional banking sector?
I mean, the limitation and the integration between the systems would be part of the design, I think. So the limitation on the account size would mean you wouldn't have the system get too big or wouldn't usurp the existing banking system, which is where most of the money is in wholesale banking anyway. So the retail banking system would be necessarily limited in size. That's the first pillar of preventing that kind of cyclicality. And then, you could have sort of the ability to speak between the banking accounts. The banking account would be integrated with your digital account. And that could also, mean that the money flow back and forth wouldn't be as destabilizing. I don't know, do you have any?
Well, Michael Board and I have thought about a lot about this. Our recommendation is to think about, during emergencies, these digital dollars are like a safe deposit box. And the right solution would be to in an emergency, okay, for large amounts of digital dollars, to impose a safe deposit box fee, which could be 1% or 2%, enough to discourage huge institutions from moving all their money out of the commercial paper market into digital dollars. So I think this is a totally solvable, it's a totally solvable problem. There might be some
The limitation that you
combination of
couldn't
caps
move that
and-
size of money, it couldn't destabilize the commercial paper market in our design. It just wouldn't be, the scope would not be available for that.
Okay, great. I appreciate those answers. We'll yield the balance of my time and recognize the ranking member for 5 minutes of additional questions.
Well, again, Mr. Chairman, thank you very much for your leadership on this issue and for holding this hearing, which is clearly a pressing issue, urgent and important for national security, for the unbanked, for personal privacy and civil liberties. A lot of issues covered today. So one final comment and then a question. The comment is, I think what we learned today was that Chairman Powell was absolutely right about getting this right as opposed to getting there first. I think there is urgency, and so I think we do need to move forward with urgency, but getting it right is so critically important. And I think we learned that there are some dangers associated with privacy, with manipulation of monetary policy. I appreciate my colleague from Massachusetts recognizing that this is blurring the lines, Dr. Coronado, between fiscal policy and monetary policy.
They've already been blurred.
And let me also just say, well, that's true. And I think we need to restore the Fed to be a monetary policy only and accountable. Yes, independent, but accountable to Congress. And Congress and the elected officials of this country should be the fiscal policymakers in this country. The other concern is the concern that the chairman just raised, and the possibility that this could get out of control to the point where a central bank digital currency is making an end run around the private commercial banking system. So what I have concluded is that direct Fed accounts is probably not the way to go. That two-tier is if we're going to go in this direction for purposes of sanctions effectiveness, sanctions enforcement, for purposes of dealing with the competitiveness challenge from China and preserving the dollar as the world's reserve currency, if this is the direction we need to go to pursue and protect those ends, then we've got to be careful about making an end run around the private banking system, compromising privacy, and manipulating monetary policy in a way that irretrievably blurs the distinction between monetary policy and fiscal policy. And so I'll conclude with the question that I have for Mr. Baldwin. What is, in your view, the danger of the Fed holding so much consumer information if we move in this direction using accounts at the Fed as opposed to a two-tier system where you would have, to the extent that we move in the direction of a central bank digital currency, private sector control of wallets?
Across all financial services, I think the key thing that keeps everybody up at night is a wide-scale cyber attack. So anytime you're dealing with an account-based system that has everything in one centralized place, that's a prime target for nation-state cyber warfare. Disintermediating and having different troves of information potentially facilitated by the private sector makes it more difficult to go after one strategic source that would take down an entire system.
And do you believe that that's possible to do this, to set up a central bank digital currency that is sophisticated enough to guard against that kind of a threat?
An account-based approach would be traditional, or similar to traditional banking. So there'd be wide-scale cyber implementations that need to occur. Something occurring on a ledger system, so a tokenized system, would have different security considerations, but blockchain technology, time and time again, has shown to be a very secure method of means of transfers of value.
Well, thank you all for your testimony. We clearly have more work to do on this, and that's why I endorse the legislation that Mr. Hill and our chairman have authored, and I do echo Mr. Hill's comments to encourage our chairman here to see if we can get some of these bills in a markup. So with that, thank you to all the witnesses for your important and illuminating testimony today, and I yield back.
I thank the ranking member and really would like to thank our witnesses for their testimony today and what was a fascinating conversation. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. Without objection, I'd like to enter into the record materials from the American Bankers Association, Public Citizen, and the National Association of Convenience Stores. I remind members that written questions and materials for the record should be submitted to the email address provided to your offices. With that, I thank the witnesses again, and this hearing is adjourned.